we're generally negative on the outlook for Asian currencies, purely from a balance of payments perspective. The idea is that, if the Western economies are in a recession, then countries like Korea, Singapore, even China, end demand will be very, very weak. So even if you have China returning to activity, even if you have supply chains returning to activity, the export outlook is going to be quite weak and not fully offset by import compression. And from a portfolio flow perspective, you still have portfolio outflows for a lot of these countries, not quite where they tend to be in terms of peak drawdowns from a historical perspective. So generally, I think Asian currencies could continue to weaken a bit further from here. We probably don't get the dislocation that we saw back in March when dollar Korea got close to 1,300. But certainly our bias is for Asian currencies to weaken a bit further from here because of balance payments reasons.
And Adarsh, what is your best estimate on where we go in terms of risk appetite from here? Because we had that risk rally, particularly in equities last week, and now that's been dented, kicking off the new trading week. We thought we were getting a stabilization in U.S. futures as oil prices stabilized, and now that story has turned around so sharply just in the last few minutes or so, looking at the Dow off some 200 points according to the implied open. So what does this mean for the risk profile of currencies?
Sure. So I think most investors that I've spoken to recognize that the risk rally, and in particular the equity rally that we've seen in the US, has been very systematic and technical in nature. It's been driven by momentum. It's been driven by funds that trade momentum. And it's been driven by the fact that volatility has been coming lower, and therefore these systematic funds tend to invest more in equities. Now, but from a fundamental perspective, I think most people remain quite cautious, and that's certainly our view as well. Particularly from an economic perspective, I think you're going to see at least 2, if not 3 quarters of very weak growth in the major economies. And even a country like China that's sort of returning back to activity, things like consumer spending still look quite weak. And as I said, end demand will continue to look quite weak. So I think I recognize that, cash levels are quite high. Positioning is not quite there in terms of being long risk. And that's part of the reason that the risk rally has continued for longer than most people expected. But our bias is probably to fade the risk rally over the next 1 or 2 months, particularly in the currency space, including high beta Asian currencies.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.